All right, everybody, we're here with Matt Theriault from Epic Real Estate. And what's the official name of your podcast? I don't want to screw it up.
Yeah, it's Epic Real Estate Investing.
Okay, got it.
So I put that little word there on the end to really confuse you.
That's awesome. It shows up in the iTunes links, and just to let our listeners know, yours was one of the first podcasts I ever stumbled across 2 years ago when I just even had the glimmer of hope of investing. Just typed into the real estate investing into the old iTunes search engine, and yours was the first one that popped up. And I listened to a couple episodes, and I had an 8-hour drive ahead of me. So I just stocked up like 50 episodes in a row. And by the time I got to my destination, I was totally hooked and loved all the information. So that's kind of how I found you. And it's been a journey since then, of us learning from you and implementing things that you teach. So we're happy to have Matt Theriault from Epic Real Estate on the podcast today.
Perfect. Thanks for having me, guys. Appreciate it.
Yeah, awesome. And you're out in sunny LA right now, right?
I am. We're having an Arctic chill come through. I think it got down to 62 degrees today. And, I had to actually wear some warm clothes today. I had to put on an actual sweatshirt.
And see, I just had to write a big check to our snow removal guy to remove snow from a bunch of our property. So I don't feel too bad for you.
Yeah, right. I know. So, I said that tongue in cheek.
Yeah, exactly. So what I would love to know, and for, our show is kind of focused on starting our journey in real estate investing. So, we love to help new investors get started any way they can. Maybe you could tell us just the quick version of how you even got the idea to invest in real estate and what made you think it was a good idea at all.
Sure. Yeah. When I got out of the Marine Corps, I spent the next 15 years of my life in the music business, and I did really well for myself there. And then the digital download thing came along and just kind of turned that whole industry upside down. And I was at a point where I was bagging groceries. I was 34 years old bagging groceries, and I really missed my money. Like, I really wanted my money back. I wanted my lifestyle back. Right. And, I didn't know how to do anything else. I didn't have a plan B. And then the most unlikely resource of all people was the grocery store manager. We both, coincidentally, were both 34 years old. He was the manager of the store, and I was doing the paper or plastic thing. And he said, Matt, you want your money back? Real estate. Real estate is the final frontier where the average person has a legitimate shot at creating real wealth. And I've probably said that 1,000 times since I heard it that day, but it really resonated with me. And I was like, wow, that's the final frontier where the average person can do this. Because I feel very below average at this point. Right. I was like, okay, that's what I got to do. That was my plan B. I was like, I didn't know if it was true or not. It was the best answer I'd had in 6 months of bagging groceries. So I pursued it, and, I've never looked back. And, I would say we're at a place in our life where it's far exceeded where we ever were in the music business.
Awesome. And one thing, it seems like people, they almost arrive at they know they need to generate passive income first, and then through figuring out the best routes to do that, they arrive at real estate. So you kind of went backwards. You said you got recommended to get into real estate, and then you realized it was a great source of passive income, or what was the path there?
Yeah, I think when I decided that I was going to pursue real estate, I looked at everything that was real estate related, and really that was in 2004, 2003, and kind of the book that was really out there that was making the most noise was Rich Dad Poor Dad. It had just been released a year before that, I think. And so that was one of the very first books I had consumed, and I didn't actually eat it. I read it. But the idea of passive income, that was like the first time that idea had ever been shared with me. I speak English. I can put the word passive and income together and kind of figure out what that they probably meant by it. But actually how to do it and how you could use that as a form to escape the rat race, right?
Right.
So I really saw that book, Rich Dad Poor Dad, more as a money book. And it was disguised as a real estate book.
Right.
And so just the concept of every single transaction that you encounter where money is going to exchange hands, how can you turn your portion into a stream of income rather than just taking this chunk of income and go put it in the bank or just go spend it on a bunch of stuff, right?
Yeah.
So I really resonated with that. And I was like, okay, I'm at a place in my life. I don't want to start over again. I already had this big rise and fall story, and I don't want to go through this again. So how can I just make sure that all my essential needs are taken care of? And so I set out and I was like, okay, I'm going to focus on just residual income. Real estate seems like that's the biggest no-brainer and the easiest place to do that. Not that it's easy, but it's probably the easiest. And let's just focus on acquiring these assets, creating residual income, and decreasing our expenses to where we get that income above. And now when I'm here, now I can have my lifestyle rise up with my passive income,
right,
rather than the typical way of we're always chasing our expenses, right?
Yep.
So that's how that happened.
So it's funny that, I mean, you mentioned Rich Dad Poor Dad. It seems like that book in particular has launched just hundreds of thousands of investors. And that was the kind of the book that put it together for me as well. Because when I thought of passive income, I always thought of, you got to be Steve Jobs and you have to come up with you have to invent the next iPhone or something in order to have passive income.
Right.
Or, like you said, as a musician, write a hit song or something that people pay royalties on. It didn't seem like it was attainable. And Rich Dad Poor Dad, for me, connected the dots to real estate, even though the book doesn't really spell it out at all. It just kind of tells you that passive income is a great idea, and the theories. Then you have to kind of go out and figure it out for yourself from there. So how did you make that leap from getting the idea to actually starting to purchase properties?
Got it. So at the time I was reading that, I was probably 6 months into being a real estate agent. Okay. And so I had a good grasp of what active income was.
Right.
I realized that, okay, so I need to take some of these commissions I'm making as an agent. I need to start buying real estate to rent them out and receive the income that way. So that was kind of what I was thinking I was going to do. And after 3 years and not owning one property yet, I was like, okay, we got to figure out something different, a different way to go about this. And so I made this transition. It was a very pivotal day. I remember it really clearly, where I just made this, had this epiphany, like, wow, if real estate is really where the money's at, if this is where it all happens, I'm sitting on the wrong side of the desk and representing other people and their purchases and their sales of real estate. I need to get on the other side and represent myself and my own acquisitions, my own, sales.
Did you see investors?
And so I went out.
Were you doing deals with investors? So you were seeing how people were profiting, not just resident owners?
Yep. I had clients who were investors, and, they were some of my best clients because they've required very little attention. They just wanted you to process the paperwork for them and keep them out of trouble, right? And so they were making so much money at that moment. I mean, that was really a boom of real estate where, you could buy a house for full retail, take 3 months to fix it up, and it had already appreciated 15%.
Wow.
It was sick, right? So I saw what they were making, and I saw that they were showing up to our meetings in jeans and t-shirts, and I'm showing up in a suit and tie, and they take off for the weekends. I got to hold their house open on the weekends. And I was just like, I want that. I want to do that. Mm-hmm.
Sure. At one point you had said that it took you about 4 years. It was like a 4 or 5 year process to escape the rat race. And knowing what you know now, you could do that in a much shorter amount of time. What are those steps that you think?
Yeah, definitely.
That you could have taken to accelerate the process?
Obviously, or maybe it's obvious to me, bigger action, not being so timid initially and working my way into the process so slowly. That would have been the biggest thing. Secondarily, probably, as real estate investors, every time we get a property under contract, we have an option. We can sell the house for this giant chunk of cash, or we can hold on to it for this small little monthly income. And, when you're faced with that real world decision, logically, I could probably explain it to you to which one you would take. But when the real world situation arises and you're like, $30,000 or $300 a month, I took the $30,000 probably more often than I should have. Is probably how I could have done it a lot quicker. And understanding what that $300 a month actually represented at the time, $360,000 in the bank somewhere earning interest. Right. So you could have one house to get the $300 a month, or flip 6 houses to generate that money, right? Or 6 times 3, no, more than that. It's like 10, 12 times, right? So 12 houses to equal that one transaction. And once I went through a year and started doing that math, I was like, okay, no more flipping. And then it really accelerated. So that little $300 on top of each other, they really started to add up. And I think that very first one is probably the toughest one, because you're thinking, I'm going through all of this trouble, all of this hassle, all of this work and this due diligence, and you're rounding up the money and you're finding tenants, you're managing the property, all for just $300 a month. That doesn't make a big impact on anyone's life. But if you ever want to get to $3,000 a month, you have to start with the 300. Like, you've got to put that first one in there as a foundation so you can start stacking those $300 on top of each other, right? Yeah. So I think just kind of knowing that, I would have totally ignored the $30,000 or the giant chunks of cash and just constantly just boom, 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 boom.
So that's really interesting. You said no more flipping. So today you don't do any flipping. That's such a hot topic right now that it's.
Yeah. No, we don't do any like fix and flipping. We can't buy them all. And quite honestly, when you market for a property and you get stuff under contract, you don't want to hold them all, right? So it's kind of like the fisherman that goes out and he's fishing for tuna, and he comes back with his nets filled, but he's got a bunch of mackerel and bonita and sturgeon in his freaking, I don't know if sturgeon comes in the net, but you got a bunch of fish that you weren't really looking for. So I'm going to keep all the tuna to myself.
Yeah.
And I'm going to sell all this other stuff that I wasn't really looking for. And that's kind of how the marketing works in real estate. So we flip the bonita, we flip the mackerel, we hold on to the tuna, so to speak. And so we do both, because there's room for both. Once you've got your basic needs set, it's still fun to make that just giant piles of cash, right? Right. It allows you to go out and buy more real estate, and nicer real estate that you do want to hold on to.
Yeah, and also those chunks, you can repurpose those chunks of money into more buy and hold, longer term strategy, and that's kind of what we've done too, based on that same advice.
Exactly.
Awesome.
So I wanted so we don't run out of time, I wanted to focus on one thing that you say quite often, and it's the concept of, it's not a money problem, it's an idea problem. Mm-hmm. Would you mind elaborating on that a little bit?
Sure. Money is just a tool, right? It's a resource, and it really only has the meaning or has the value that we assign to it. And in our society, we assign a lot of value to money, and it's this just giant thing, and it has such a huge value that we can't see beyond it, what it actually is. And once you realize it is a tool and a resource equal to all the other tools and resources you have at your disposal, once you realize that, a lot of opportunities will start to open up for you, and particularly doors that you thought were shut will start to open. For example, if you're going to market for discounted real estate, so the only reason you're going to get discounted real estate is because someone has some sort of problem or issue. So they're in some sort of financial distress, they are in personal distress, they're going through divorce, they lost their job, or maybe the property's in distress, they had bad tenants and they tore it up and now they don't want to fix it up again, whatever it may be. That's a pain in the butt for somebody at some point. Mm-hmm. And a lot of times just removing that pain in the butt is more valuable than the money you'd get for it.
Sure.
And I think mistakenly people will go in and they'll, for an example, as an investor, like, I'm not in distress. Like, I'm not going to give any of my property away at a discount. So you're going to have to come with money to get one of my properties. But that's me in my position.
Right.
Them in their situation, they got other stuff. They got bigger fish to fry than this house that's giving them a headache and keeping them up at night. And, make that go away and help me get to my next location. That's going to give me a world of peace in my world. And, that's worth a lot of me giving you a lot of equity in exchange for that. So that's what I talk about when it's a money, it's an idea problem, is that the person that you're dealing with has a problem or a bunch of problems. There's a lot of different ideas that will solve that problem for them other than money.
Right. That's great. And then, going with that concept of mindset, a lot of your training revolves around mindset. and the idea versus money problem, that it's just a mindset shift, right? So how important is mindset to a beginning real estate investor, and just having the confidence to believe they can do it and getting their mind right?
Yeah, I think mindset is probably the most important thing, regardless of what your endeavor is, right? For example, the example I always use is I can show anybody how to properly fill out a purchase agreement in 10 to 15 minutes to where they'd be just as good at it as I am.
Mm-hmm.
But it's the mindset that's going to get them to fill that out on a daily basis and submit it to a seller.
Right.
I can't teach you how to do that. That's your mindset, right? So that's a big distinguishing factor. Confidence is a huge one, particularly when you get into something new.
Mm-hmm.
If you start calling, say, for sale by owners, and you got 20 you're going to call, and the first 5 that you go through, they have no desire whatsoever, any interest whatsoever in selling to you. And you're like, wow, that's 5 people in a row. They don't want to sell to me. I don't think this works. That can be a big confidence crusher, right? And you go through, well, keep on trying because I've got the mindset, right? So you go through 5 more and you get the same answer. You go through 10 of those when you're brand new in this business, that can feel like 100.
Mm-hmm.
Oh, yeah.
But if you got the right mindset, hey, it's just a process. I'm this much closer to getting that yes, because 1 out of these 20 is going to say yes, and that's going to result in a $50,000 pay date for me. So the mindset, it's essential.
One thing we found too is a lot of newer investors, they negotiate almost on behalf of the seller. They say, they'll never take this. This is way too low. They're never going to take this. I'm not even going to bother. And we found that a smart investor will say, they're not going to take this, but we're going to submit it anyways and just proceed. Would you agree with that?
Totally. And it kind of goes back to what we were just talking about, the money problem, the idea problem, right? You're going in there thinking this person wants money because that's what you would want. Right. So you're already putting yourself in the seller's shoes, negotiating on their behalf against yourself. Right. So yeah, absolutely. And with that said, kind of just submitting it and anyway is one way to go about it. Or the other way to go about it is ask them what they want before you submit it. And that can, lift the veil on a whole lot of stuff. And, you think they're not going to take less than 50, but you got the right mindset. So you're going to offer 40 and you ask them what they want. And they say, you can have it. Just get it off my name. Right. So even then with that right mindset, not taking that first step of asking them what they want can, you think you might've won, but you could have done even better for yourself if you just asked them what they wanted in the first place and then did your best to give it to them.
Yeah, it's becoming an affirmation for us. The concept of don't assume their motivation. It just, you're going to cut yourself off.
Let me ask you this. So when people, when you're telling newer investors, a lot of times you're talking to your family and your friends and you're saying, I'm going to get involved in real estate investing. And then you kind of get all the negative Nancy's out there saying real estate's risky. What happens if there's a crash, all those kind of things. You should stay in your safe job, allegedly safe job. What's your response to real estate being a risky endeavor?
Yeah, it's risky if you're trying to time the market. It's risky if you're a trader. It's risky if you're buying and selling. It's risky if you're counting on appreciation. It's not risky if you're investing for cash flow. It's probably the safest investment out there.
Right.
It's the safest, highest rewarding asset out there if you do it the right way. And that's investing to hold. That's investing for income. If you look back, say 20 years ago, if you would have bought and sold 20 houses 20 years ago, and you would have ran a parallel life with, if you bought those houses and held them for 20 years, where you are today is a very different place between those two scenarios. Right? So, and you can go back at any time in history and do that. And you'll always end up, wow, if I just bought and held them, I would have been much better. And I cash flowed the whole time. The values did this along the way, right? Ooh, I got my little break in. The values might have gone up and down along the way, but as long as you were cash flowing, who cares? I was holding, right? So it never really materialized as a loss for me when everybody else was all panicked and bailing out.
And that's a concept people need to understand too is that while the value of the property may dip, in a lower market, rents typically aren't as affected as drastically. I mean, they may see a slight dip based on demand, but demand might even go up if people are losing their houses.
Right.
Mm-hmm. Yeah, rents are not nearly as volatile as the value of the property, unless you're in a community or a county or a city that's dependent on one industry.
Right.
If the coal mine goes out of business, then no one's going to be able to pay their rent. But if you're in a diverse community where the workforce is diversified amongst different niches and industries, then that rent is not going to be nearly as volatile as the purchase price will. Plus, the rent will never be zero. There's nothing to say, hey, I'm just going to cut this back $100 a month to maintain my tenant and get through this downtime, when everybody else is filing bankruptcy and running for the hills and going to work at they're running into Costco or Walmart or, hey, see what's the newest bank teller job, right? That's what they'll have to do. But all you have to do is just lower your rent $100 and you get to keep the tenant, keep the income.
So you live in California. How do you possibly invest for cash flow when you're living in one of the, the craziest states where the price to rent ratio just doesn't work?
Well, you don't, right? That's how you do it. No, you're going to have to go to a market where the rent or price to rent ratio is in your favor of cash flow. Mm-hmm. So that's one. Just because you don't live in that market doesn't mean you can't do it. You just have to find the location of where you can. So my first step in doing that, and we're in 12 different markets. I'm in California. I only own 3 properties here, and none of them cash flow. But I own, we're about 50-ish properties all across the country in 12 different markets, and they all cash flow. But I don't live there, right? Yep. So to do that, I think conventional wisdom would have you go and look at the economic factors in any specific area. What is the population doing? What does the job force look like? And what is the local government doing? And you're looking for all these things to analyze the stability of an area or anticipate the growth of an area. And what's probably more important than that is that you have a team there that can manage your assets for you. And that most of the time that comes by way of a property manager. So I think you pick your relationships and your property management first, and then you try to squeeze the economics into that box there. So you do that, then you can't lose.
You shared a story once where you had students who were, it was the grass is greener on the other side of the fence. Mm-hmm. And it turned out the one person was complaining that there were no deals in their market. And then the other one was doing it virtually into that same market. I thought that was really interesting, where it was the mindset again on that.
Yep. It's something I've been saying for years. I've been telling everybody that for years. And it just coincidentally happened where 2 clients of mine, those 2 conversations happened probably within a 40-hour difference apart. And I was like, aha, see, I knew it. There's proof. So it's if the grass is greener on the other side, it's probably got a significantly higher water bill as well.
Yeah. So, that is a very good concept, though, because a lot of people will have a tendency of wanting to do something virtually, and they don't think about the amount of work and effort that you and your team had to go through to vet everybody out in these remote areas. I mean, that had to have been a lot of time, work, and effort.
Yeah, and we still kind of experience some time and effort from that, is because you don't always find the right person the first time, even if you do all the vetting correctly, right? You have to go through some bad relationships to find the good ones, and so we've certainly done that. We've paid our dues over the last decade, and we very much stabilized, but we didn't get here on a smooth road, that's for sure.
So speaking of, how long you've been doing this and, how important mindset is, how do you maintain your motivation and mindset this far into the game?
Because I know what the alternative is. And that's this might be funny, but it's actually pretty true, is I know what my life looks like if I don't take responsibility for my results. I know what the marketplace had told me I was worth, not having a college diploma, right? Or a degree. It's high school diploma. See, I didn't even graduate, so I don't even know what they're called. But I didn't have this piece of paper to validate my worth to a company or an organization. And I ended up bagging groceries, right?
Mm-hmm.
And, I'm obviously much smarter than that. I'm much more valuable to a company than that, but I didn't have anything out there to prove to anybody. So I knew I had to go and create my own future. And whether that's personally or financially, no one was going to do that for me. So I just know that. There was a great quote by Jerry West, the basketball players. Like, he said, if we all practiced on the days we felt like it, or if we all went to work on the days we felt like it, we would all be great. It's going to work on the days we don't feel like it is where the difference is made.
Yeah.
And that was, I really resonate with that. And so on days I don't feel like it, I said, nope, today is the difference that's going to be made. So this is the reason I have to go today. And
right.
Then the days I feel like working, I just go to the beach. But no, I'm just kidding. But yeah, so awesome. I just know what the alternative is. And I know, I look at the statistics. I look at what today's 65-year-olds are experiencing. 99% of them aren't prepared to retire. They are going to be dependent or continue to work well into their golden years. And those that have made it, they've got one thing in common. They either made their money or they preserve their money in real estate. So essentially what keeps me motivated is you don't have a choice. You have to do this.
Right.
Yeah, that's awesome. So one thing you say a lot too is that you're not really a real estate investor first, but a marketer first. Mm-hmm. Maybe explain that concept.
Sure. I mean, as a real estate investor or an investor in general, you have to buy low and sell high, right? That's kind of the basic premise. That's the rule. Yep. If you don't do that, you're not going to be a very good investor and you're not going to be doing it very long. So you have to make youmoney. Otherwise, that's, you're going against the definition of an investor. So to find discounts, to find deals, you can hunt for them or you can fish for them. And when you're I'd prefer to fish. I don't like hunting people down. I don't like chasing people. It works. It's been time-honored, strategy that's absolutely proven to work. I just don't like doing it that way. It goes against the grain of my personality or just my personal desires. Mm-hmm. So I'd rather fish. And what fishing is essentially it's marketing, right? It's identifying a problem that you're going to go out and solve for people and then promoting your solution in front of those people so that they contact you. And if you can't do that, you're never going to buy real estate at a discount consistently.
Right.
So marketing, it's the number one skill that you need as a real estate investor for longevity in this game and to continue to do this in any market. Whether the market goes up or down, there's always a relative low and a high price, a low price to buy at and a higher price to sell at. Right. And you have to constantly be marketing. And so you're a marketer first before you even have the opportunity to invest.
So one thing that you always talk about too is, you need to spend your time focused on the people that have true motivation, which might be a really small percentage of the people out there, right? So in order to get enough of that small percentage in front of you, you have to get eyeballs, a lot of eyeballs on you in the first place. So I love that as a concept. So we're going to kind of wrap it up here. We're closing in at a half hour, but where's the best place for people to find out more about Epic Real Estate and how to get involved with you?
Well, if they're listening to your amazing podcast, then they know how to find podcasts. Yep. And so our podcast is Epic Real Estate Investing. We're on iTunes, we're on SoundCloud, we're on iHeartRadio, just Spotify as recent as a few months ago, and Google's got their version, Apple's got their version, so we're everywhere. So if you found a podcast or you're listening to us right now, then you can find me too.
And if you found us, I know you can find you because I found you real easy just by typing real estate investing in when I was first getting going. So awesome.
Sweet. Well, there you go.
So yeah, we have to give you a lot of credit, Matt. There's been a lot of things that you've said, and because of it, it's been some of that massive action that we've needed to take. So just wanted to wrap up by giving you a thanks.
You're very welcome. And just the fact that you took the advice and followed it is thanks enough. So I really appreciate you guys, and it's been a pleasure meeting you.
Awesome. All right. That was Matt Theriault from Epic Real Estate Investing Podcast. Check him out.